Good morning. It's the 4th of May. We are Signal Centre talking bull. I'm Joe, joined by Steve and Jamie. Good morning, gentlemen.
Good morning.
Good
May
morning.
the 4th be with you both.
Oh, like it, Joe.
Very
Like
nice.
that.
Love that.
Star Wars Day. But more importantly, it's Fed decision day. So let's get stuck into the latest headlines before we move into a technical look at what is happening in the markets at the moment. So the Fed are set to hike rates again this evening. They'll announce their interest rate decision later, with a strong expectation that the central bank will announce an interest rate hike of 50 basis points to put interest rates overall at 1%. Futures markets indicate there's a small possibility of an even larger rate hike of 75 basis points. The rhetoric on inflation will be important, with forward guidance from Chair Powell and also key elements for all asset classes. So we'll wait and see what happens from that later today. That is at 7 o'clock UK time. The latest data from the US labour market indicates strong numbers. We saw an increase of 11.55 million for March from 11.34 previously, which was above the expectation. So that's kind of a decent indication ahead of the non-farm payroll numbers, which are due out on Friday. The dollar continues to consolidate ahead of the Federal Reserve policy decision. It's unlikely that we're going to get any wild moves ahead of that today, so we may just see a little bit of treading water in various asset classes. The US bond yields declined yesterday, with the 10-year yield retreating to around 2.92 after testing the 3% level. However, there was a renewed advance in the Asian session, with it creeping back up to 2.97 and then back up to 3% again early this morning. In terms of the UK, the cost pressures remain strong. The UK Pmi Index was revised to a final reading of 55.8 from a flash reading of 55.3. Growth in new orders, and there was significant weakness in export orders amid weak demand from the euro area. And finally, the China reservations continue. The market remains closed for a holiday on Wednesday, which is dampening activity in Asia. But unease over the outlook remains high, especially with Beijing announcing that schools will be closed for an additional week as they continue to obviously put these things in place for coronavirus. So that's pretty much that for the latest headlines. Let's now have a look at the markets from a technical perspective, and I'm going to hand over to Steve O'Hare.
Thanks, mate. I'm looking at a frozen screen at the moment because I was just doing something fiddly in the background. So yeah, let's just start with Bitcoin. We're still seeing this retest of the upward trending support, this channel. This is a corrective channel that we're in this downward move. We do expect further downside in Bitcoin. I'm sorry to say, all you Bitcoin holders, but we are testing pretty decent support, and it's doing a job of holding at the moment. So things looking okay, but as long as we hold above the 37 level, a break below there opens up the downside, and we would then target a move towards the main support, which comes in between 28,800 and 32,000. So that's the one to watch. On the commodity side of things, have a quick look at gold. Price action in gold has been negative over the last 3 weeks, and it's just hit the upward trending support. Well, it's just stalled in front of the upward trending support level. I expected to test it. That comes in at 1840. So what did we get down to? We got down to 1850 yesterday, and we formed this candle. This is a bit of a doji candle, and highlights a bit of indecision. Now, since we've had a sell-off, that concludes that maybe this sell-off has stalled. We've got this indecision, and we've had a bit of a positive start today. Looking at the 4-hour chart, that'll give us a little bit more of a reading on where we are on the short term, and we had a similar sort of candle posted on the 4-hour chart yesterday at 3 o'clock, which put an end to this little uptick that we saw in gold. So gold resistance coming in around about 1878, and then 1890 to 95 should be the next level after that. 1920 is key. But as I say, a break below 1850 really opens up the downside in gold. Oil we'll take a quick look at as well. We've got this inverse head and shoulders on the short-term chart. Let's jump back to the longer-term chart, which we've seen this impulsive move going since the pandemic lows. It's a bit of an awkward-looking pattern, but seems to be playing out quite well. And we've just got this period of consolidation here. Really, we were expecting a little bit of an ABC correction lower, which was targeted a move to around about $85. That hasn't transpired. We've seen a couple of slightly more positive weeks, which is keeping the lows higher than the previous swing. So 92.60 is the level to watch in that. That's about $11 away, and above resistance is a bit closer, 108.90 in that market to so a break of 108.90 on the upside should open up the upside again. As I say, 4-hour chart, short-term chart, looking slightly more positive. Over to
Thanks, Steve.
you.
Okay, I don't have much really to add on top of what I spoke about yesterday on the FX markets, and I think that's just because we're going to see not a lot happening ahead of the Federal Reserve meeting later today. So dollar index, as we mentioned in the market highlights, continues to consolidate, as we can see here. Really limited price action over the last 24 hours, although we did see a little bit of a move to the downside, but it recovered pretty well. So clearly still some decent appetite for the US dollar. If we take a look at the euro versus the dollar, we can see a similar sort of situation, but in reverse, just really consolidating around these levels as things stand. Similar situation with cable, nothing really going on there either. So all braced really for what we are likely to see from the Fed Chair Powell later. So obviously in terms of the decision itself, there is still some potential for them to actually surprise the market with a 75 basis point hike in rates, but also we'll be looking to see what he says in terms of the rhetoric that he uses in the press conference at 7:30. So expecting a fair amount of volatility later today. If we take a look at the indices, they are also pretty much in a holding pattern. If we take a look at the DAX, we continue to see that trading in this short-term downtrend. We found some support on the DAX around about a 50% fib level here, which is in green. But overall, it's still trading in this downtrend. So therefore, we are expecting any rallies to be fairly short-lived and for the sellers to step back in. If we take a look at the US markets, yesterday, the NASDAQ, we saw that bounce from these lows that we posted on the 2nd of May, but nothing really to get excited about there. Still looks like the pressure is very much on, and it's the same situation with the S&P 500. We broke down through some big levels of support, 4106, but we managed to close above it, forming a really nice bullish hammer. We have seen a bit of follow through to the upside, but again, nothing really that's going to tempt people back in at this stage. For me, it still looks like we've just got this big rounding top formation taking place on the daily chart, which is pretty negative for the medium-term outlook. Finally, taking a look at the FTSE 100, that had a decent day yesterday, supported by mining and oil, as it so often is. It still remains below this major resistance here at 76.78. So while below that level, yes, there is possibility that it could continue to move in a choppy fashion below that level, but we really need to see a breakout above that before we can start getting excited about the prospects of that going forward. But as we know, it's so heavily linked to the prices of commodities and also the US dollar. So that's it from me. Nothing really much to go on. Jamie, what's it looking like in the stock space?
Thank you, Joe. Right, it feels like I've not been here for ages. It's only been 4 days, but it seems like I've missed a lot. We'll jump in with our biggest gainer and loser. So the biggest lose we've got today is this Chegg. I've never heard of Chegg before, but Chegg's having a bad time. 2 earnings ago, so back in November now, we had this huge gap down. You can see a considerable percentage off there. We then had this consolidation for the last few months, and right before earnings, we're at this key level of support, which was finding at this kind of $24 level. And that's kind of a bit of a common theme I've seen recently. Is coming into earnings, the price gravitating towards a support or a resistance level, kind of moving towards those key levels. So they're the ones I kind of watch a bit more, and we'll circle back to that later. But we gapped through the support and closed down 30% on the day. The stock did rally from where it opened, but nevertheless, still a very negative day. The biggest gainer I've got here is this. Oh, here we go. Nuvectis Pharmaceutical. And this, from a technical perspective, we can do a little bit with, because we've got these higher lows coming in here on the daily chart. We then had this real period of not a lot of price action, to be honest, much lower volume than we've seen. And now it looks like we've broken through that resistance level, which was posting at $10, which is also a psychological level. So we had this significant close through, and I'll be looking to see some follow through on that today. We will jump into some other stocks now, and I wanted to have a quick look at Amazon, actually, which brings me back to what I was just saying about price kind of gravitating towards support and resistance around earnings. And this earnings was actually a few days ago, but I don't know if I highlighted it at the time. But we gapped straight through this support. And things aren't looking great for Amazon. I mean, anyone that's watched this for the last couple of years, we've not had a lot going on in terms of movement to the upside. It's been very much a consolidation type pattern. But now I think this is the first real earnings we've had, which signifies maybe that upward momentum is now coming to an end. If we break it out to a weekly chart, we can see we wicked off this level once, 2,700. We wicked off it again with this doji style candle, but last week saw a really convincing break and close through. So not so hot for Amazon. I wouldn't be surprised if we get a bit of a retest of this level now, which we can make resistance level, and then potential scope for further downside. So we'll keep an eye on that. Facebook, again, not completely sure if I've covered this or whether it's just been covered in my head, but we had earnings, we gapped down, we had this doji candle, and then we gapped up. So it was a bit of a strange sequence of days for Facebook / Meta. I keep calling it Facebook. But we're kind of back up in this kind of no man's land for now, ranging between this 235 and this 186. I mean, there's nothing too crazy looking at there. Robinhood had earnings, nothing too crazy, it looks like, in terms of how the stock reacted to it. I think if we bring this out to a weekly, we had we almost broke through. It was a bit more of a doji style candle again. So price closed quite close to where it opened last week. So we are in this downtrend. So I'd have this bias for it to head lower, but that's a bit of a case of wait and see. Jury's still out on that. We'll have a quick look at Novavax, because I seem to always, and I've got to give it some credit. Look, we've had these 2 positive days in a row. We're up about, what is that? I'm guessing 25% in 2 days, maybe a bit more. I don't know. But I'm always bashing Novavax and saying it looks horrible. We've had 2 updates on good volume. We've got earnings coming up a bit later as well this week, or maybe that's into next week. But yeah, so I wouldn't be surprised if, again, we might get a retest of this previous support level. I think that would make sense, the logical target, if we do keep seeing some upside on that. Lastly, I'll quickly finish with Airbnb. I'm not sure I've actually looked at this before, but we've been in this big consolidation since the IPO back in of December, with the lows being about 130, the highs being about about between 210, 215. I mean, you can either see this, there's different ways to see this from a technical perspective. You could see it as a double top if we do get this breakthrough this support zone. And if that's the case, we can anticipate a move much, much lower. But for now, I mean, again, a bit of no man's land. I'd be very interested if this were to get down to this 130 level and see how it reacts there. But for now, we're just in this big rectangle pattern, and we'll have to see where price heads. But it looks like that 130 is a safe bet for it to gravitate towards. But we'll call it a day on the stocks there.
Cool. Thanks, Jamie. Okay, gun to the head trades from yesterday. So just a quick refresh, actually, on what we do. So each day we pick a trade idea live on the video, which is then published directly to our TradingView profile. Each idea must have a stop and a target. All the ideas are placed at market, and the ideas will expire at 9 p.m. UK time, or when the stop or the target is hit. And we continue to keep track of these ideas as we've got here in our spreadsheet. So yesterday we had a sell trade idea on Aussie Swiss. That was on the back of the Aussie Central Bank hiking rates more than expected yesterday, which had a positive impact on Aussie. So I was looking to fade into that. Didn't get anything with it. 2 ticks on side at 9 o'clock. So obviously note that down as a win, but certainly nothing really exciting. And Steve, you were stopped on your Ftse long, although when I look back at that, you were pretty unlucky because it actually has gone on to hit target since.
And you laughed when you said that as well.
Well,
I
I
noticed
mean,
that.
sorry, I didn't mean to
Pretty
laugh.
unlucky, Steve.
I mean, laughed as in, you know, I felt you were unlucky, and it was just sod's law, basically.
Yeah, in fact, I wasn't unlucky. It was by poor choice of stop placement.
Right.
I was
Okay.
getting too clever in my own right, and yeah, stop was badly placed. But I did say that. I said it was a really tight stop, so
Yeah,
don't
you
copy
did
this
caveat
trade. I think we've got to change the name of this part of the show to "Don't Copy This Trade" or something similar,
Okay.
because
That'll
you
work.
shouldn't be copying that trade. Right, I don't know
Who's
who
got
wants
one?
to go first, because I'm sort of like a little bit still hurt by the fact that Joe laughed.
Jamie's got one ready.
Stopped out.
He's
Yes.
looking at
Yeah.
India.
I'm ready to go. I am looking at India today, and this is what I like. This is what I look for each day. I look for a support or resistance level that's been broken out of, and you can see here we wicked off this level. I'm going to keep sounding like what's this?
Wick off.
A wick off. But no, we've had this wick off. I'm not sure that's actually what wick off is, but all these wicks coming off this level, we've broken through. Now let me move this slide to the right so you can see we've broken through. I'd like to see a close through on this level. I mean, knowing how these things usually go, it will wick off again and stop me out. But I'm going to attempt to sell this here. We've got the lower lows coming in, and I'm going to target this 78.6 fib level. So we are going to be selling the India 50. I keep talking, it's getting away from me.
Yeah,
we're going to sell it at
talking.
16,807. We're going to have our stop at 16,991. So let me tighten that up. And our take profit will be 16,162. So we've got a nice 3.8. Is that 8.1? I think it's 8.1. Risk reward. So we're going to try and sell the India 50 today.
Cool.
Nice.
Best of luck.
Thank you.
I'm going to take a look at Sterling Oz. So this is the hourly chart. It looks as though it's trading in a bit of a bullish channel. If we look at the short-term move here, we can see a nice push to the upside followed by a pullback, and we seem to have found some support at 78.6% fib level. In the last hour, we posted a bit of a reversal off that level, followed with a decent push to the upside. So it's currently trading at 175.87. So I'm going to use that as my entry. I'm going to target a move back up to these swing highs here at 178.57. And I'm going to place a stop loss below the low that we've just posted over the last hour or so. So that will go nice and tightly there at 175.17. So I'm looking for 3.89 R on that one today. That's my trade of the day.
Nice.
Very nice.
Steve, what do you think?
Well, I'm looking for an indice as well. I was going to really put the mocker on Ftse after this hourly candle that we're posting at the moment is looking a bit toppy, but I don't want to look absolutely stupid with egg on my face after getting stopped out yesterday, and I sort of like taking a little bit of a leaf out of Jamie's book and looking at the Asia Pacific indices. Now, for me, the Hang Seng is the one that looks a little bit suspect at the moment. On the daily chart, price action so far today is forming a bearish engulfing candle, so that's negative. And if you look at the price action on the short-term chart, on the hourly chart, we've almost got a head and shoulder like pattern, topping pattern. You've got this left shoulder here. I'm not going to draw it because the neckline's not clean. Head here, come back down, retest, and a breakdown here. And this looks like a little bit of a bearish flag pattern. So a good opportunity to get some risk reward going here. Going to go short of this, and I can have the stop pretty tight. You know what they call me, tight stop Stevie, is it? Something like that. And we're going to have the right. We're getting short here in the Hang Seng at 20,831. That looks too high. 20,831, 21,031. That's again, yeah, that's probably a fair enough stop. And looking for a little bit of looking for a big correction lower on here, looking at targeting 20,031. So selling Hang Seng 20,831, targeting 20,031 with a stop at 21,031, which gives us a risk reward of 4 to 1.
Happy days.
Love that.
Notice we all avoided anything linked to the dollar, given that we've got the Fed later.
Yeah, I did look at the US indices, but they just don't look to be at the right levels to go either way. Look a bit middle of the road at the moment, so I'll avoid them.
Yeah, I agree.
Okay. So let's take a quick look then at the data that's due out today. As you can see, there is a fair amount. We have at 1:15 UK time, the US ADP jobs number. Then at 3 o'clock, we have the US ISM non-manufacturing index data. At 3:30, we have the US EIA oil inventory data. Then the big ones at 7 o'clock and 7:30. We've got the US Federal Reserve policy decision at 7. Just to reiterate there, pretty much priced in that we're going to get a 50 basis point hike on the interest rates to take that to 1%. But there are some rumours going around that it could be an even greater hike of 0.75 basis points. So that would take it to 1.25%. And then we'll be waiting for the press conference at 7:30, where obviously he will discuss the decision from the Fed and talk about future plans as well, which will obviously be well watched. Later on this week, well, tomorrow, in fact, we've got the Bank of England policy decision, and then we've got the jobs numbers from the US and Canada, the big one being obviously the US one, the non-farm payroll number, which is out on Friday. Anything else, gentlemen, to add before we call it a day?
No, good here. Thanks, Joe.
No, I think I'm good.
Cool. Right, we're posting these ideas that we've just mentioned onto our TradingView channel now. So if you want to check those out, please feel free to do so. And we'll be back tomorrow morning. So best of luck today. Obviously a very busy one, so do be careful out there.
Cheers.
Bye-bye.